It happens at 10:47 on an ordinary Tuesday. Your card doesn't work. The coffee shop blames the internet. Your bank app spins. A courier van blocks traffic because the fuel card just failed. Nothing dramatic. No alarms, no news alerts. But somewhere deep inside the financial system, a single switch just flipped, and the economy is now holding its breath. Here's the uncomfortable truth. Modern economies don't stop because people run out of money. They stop when the system that moves money decides to pause. That matters right now because global debt is higher than ever. Banks are more tightly linked than ever. And the plumbing that keeps everything flowing is thinner than most people realize. We don't live in a world of cash. We live in a world of promises between machines. Let me show you the switch. Imagine money as water in a city. You don't see the pipes. You only notice them when your tap is dry. The biggest pipe in the financial world isn't your bank. It isn't even your country's central bank. It's a quiet market where banks lend to each other for one night. Every single day, banks wake up with mismatched needs. One has too much cash because customers paid loans. Another is short because people withdrew or transferred. So they meet in a private marketplace and trade money until tomorrow morning. It sounds boring. It's not, because this overnight lending market is the heartbeat of the economy. If it flows, everything flows. Salaries clear. Card payments settle. Companies pay suppliers. If it stops, nothing else can move. Now here's the twist. Banks don't lend because they feel generous. They lend because they trust the other bank will still exist in the morning. That trust is the switch. When fear enters, even slightly, the market doesn't slow, it vanishes. In 2008, it vanished in hours. Big banks looked at each other and thought, maybe you're hiding losses. Maybe your balance sheet is fiction, so they stopped lending. Not gradually, instantly. The economy didn't crash because of bad mortgages. It crashed because banks stopped trusting each other for one night. And the math behind this is colder than it sounds. Let's say a medium bank ends the day needing $5 billion to balance its books. It doesn't have it. Normally, that's fine. It borrows overnight at tiny interest. But tonight, nobody answers the call. No loan, no mercy. By morning, that bank is technically broken. Not bankrupt in a dramatic sense, just unable to function. So it freezes payments, which breaks another bank, which scares 10 more. This is how the switch spreads. The public story is always different. We talk about bubbles, scandals, bad decisions, but the real kill switch is the same every time. Trust between banks disappears. And here's the part almost nobody hears. Central banks can print money, they can flood markets, they can shout confidence from rooftops, but they cannot force banks to trust each other. In 2019, before the pandemic, the US overnight market quietly seized up. Interest rates jumped 5 times overnight, not because of a crisis, not because of a recession, just because banks suddenly refused to lend. The Federal Reserve had to step in and inject hundreds of billions of dollars to restart a market most people don't even know exists. No press conferences, no headlines, just a finger quietly flipping the switch back on. Now compare the story we're told to the reality. We're told the system is automated, resilient, scientific, that computers balance everything, that risk is managed, that there are safeguards. In reality, the entire machine runs on a social agreement between a few dozen institutions that wake up each morning and decide whether they feel safe. And the irony is brutal. The more debt we stack into the system, the more we rely on that overnight trust. Debt means constant borrowing. Constant borrowing means constant vulnerability to fear. Every boom builds a taller tower of nightly promises, and every promise is one bad headline away from being refused. So when you hear that markets are strong, banks are well capitalized, and regulations are tighter, remember this. None of that matters at 10:47 on a Tuesday if the people inside the pipes stop believing the pipes will hold. because the hidden switch that freezes the entire economy isn't located in a server room or a central bank vault. It's inside the heads of bankers who decide whether tomorrow is guaranteed. And the most dangerous part is this: you never know the switch has been flipped until your coffee gets cold and your card doesn't work. So ask yourself, in a world built on overnight trust, how many nights does it take for confidence to run out?